airborne heading up to the bridge.
Cap, you got incoming.
Incoming already came in.
Hello there, I'm Jordan Collier, and this is the Storybook Wealth Builder channel, where Kat makes a good point. In the context of that clip though, we will discuss how inflation has already hit in a variety of ways and how you can protect that sweet earned purchasing power with the Canadian Real Return Bond ETF, ZRR. For starters, what is an ETF? An ETF is an acronym for Exchange Traded Fund that holds a basket of stocks or bonds that can be traded throughout the day on the open market. ETFs are a great way of diversifying exposure across many different sectors like energy, utilities, and financials, or different companies within one sector. If you are familiar with mutual funds, then think of ETFs as basically the same thing, but have cheaper management fees. Bonds, on the other hand, are purchased government debt that you assume will be paid back to you at a specific interest rate. I know, why would anyone want bonds these days when cash is just spewing out of every printing press? The lack of confidence that the government can pay back debt means bond interest rates must rise to entice investors to give them that cash. If you want a quick understanding of why printing money is a bad idea, I'll link it at the end screen.
Alrighty then.
Up next, inflation. As of the making of this video, no doubt you have all read headlines, articles, and watched the news of how price increases are happening across multiple different industries. With so much stimulus pumped into the economy and with few places for that cash to go, it either stayed in bank accounts, which Canadian savings over the past year are at record levels, or have made their way into non-productive assets like houses, stocks, and crypto, pushing prices to never-before-seen levels. Over the past year, another phenomenon is also pushing prices higher, which is companies cutting production across a wide swath of industries. Now that demand is ramping up with the illness waning, supply in semiconductors and lumber are seeing some of the biggest price spikes as people are looking to spend that pent-up cash that has been sitting around. Now that I've explained what a bond is, what an ETF is, and how inflation is affecting us, there must be a way to protect our cash and a way to profit off of it if possible. There seems like there is an ETF for everything, and 6 weeks before I made this video, I found the BMO Real Return Bond ETF ZRR. What makes this ETF unique is that it invests in a basket of bonds that fluctuate based on the price performance index.
What?
In short, it means your investment and interest go up as inflation goes up based on CPI. I'll leave a link in the description that can better detail how CPI works. Proven inflation fighters like gold are static in value as more people have flocked to crypto to hedge against inflation. Unlike gold, crypto doesn't have the proven track record like gold does, but offers some interesting concepts that may very well replace our entire monetary system. I mean, if you can't make more Bitcoin, fiscal responsibility in government becomes noticeably apparent. In the near term, the fear of a crypto crash based on the explosive enthusiasm for it, volatility, and the lack of understanding of what it is makes this asset class a mixed bag on whether it can safely protect your purchasing power for the long haul. Okay, back to ZRR. Like I said, 6 weeks ago, I found this ETF and decided to track it as its value was dropping. I figured if it could string at least 1 week of gains together, that would be a good indication that it had bottomed out. In those 6 weeks, the Canadian government released their first, not to mention, massive budget since 2019. And perhaps to some effect, Joe Biden and the Democrats have also released a bunch of big government spending and tax proposals. With inflation already hitting commodities, which the Consumer Price Index doesn't entirely track, means CPI is a lagging indicator for broader inflation. I thought it'd be a safe investment to park some cash into this ETF, knowing it will have positive gains from broader inflation trends. Remember that the stock market is a reflection of sentiment that is not an equal one-for-one of how the economy is actually doing. With that sentiment in mind, the fear of inflation is everywhere, giving ZRR legitimacy as a strong option to hedge against actual inflation, and a way to profit from the fear of inflation. ZRR since inception has been fairly volatile, and during the bull market run of the 2010s wouldn't be a place for me to invest. For a retiree, this ETF doesn't have the stability as other fixed income options. For a short to midterm hold, for me anyway, seemed like a decent spot to park some cash until I could figure out what to do with it. The downside to ZRR that I can see is that it only has $133 million under management with a small pool of bonds in the fund. The volume at which it trades at is also very low, meaning it may have liquidity issues. For instance, when I took up a position in this ETF, I paid market rate, which ended up being 3 cents a share higher than the actual stock price at the time. If I ever needed to sell off everything in a hurry, it may mean I'll be waiting on a buyer. If you enjoyed this video, then please do the cliche thing and super smash all the buttons of the like and subscribe variety. It really is a meaningful thank you for creating this content. With that said, I'll see you all in the comments.